in every field. I remember, just a week before, a senior lady advocate met me. She belongs to Delhi only, and uh, she asked me in the court in which matter I am appearing. I gave my brief introduction to her, and I let her know that what my practice area is. And she was very happy, and she gave this comment that we see very otherwise less women who decide to get into independent practice and also choose corporate laws as the main practice area. She gave a very, good words of feedback, and as well as motivated me. It was very nice to hear from her. And we being lady advocates, we keep motivating each other, and that's the best part. And that has to be the case also. If what I have learned coming into after profession is that we can grow always together. Uh, Alone, it's not possible any which way in the profession to grow. So happy Women's Day to each and everyone over here. We can start the session today. As the topic has already been briefed, that we would be discussing today on the waterfall mechanism. Now, for that, if I may request everyone to have the IBC with themselves so that we can discuss or start discussing the provision, having looking at the provision that from the Bear Act, and then start interpreting the same. That would be interesting as well, and then we can have the interactive session also. I would just share my screen, though it's a very short PPT, but it would give a brief idea that what we are going to discuss. Um, just let me know if my screen is visible.
Yes, ma'am, it is visible.
Okay. So, as are most of the people over here insolvency professionals also, or if just I may know the audience so that I can take the topic accordingly.
Ma'am, all are insolvency professionals.
Okay, that's great. So, waterfall mechanism, uh, as everyone here would already be knowing in which section it has been provided for. This is section 53 of the IBC that provides for the waterfall mechanism. Now, as you see on the screen, that how, uh, so waterfall mechanism is giving the mechanism in which manner in the liquidation process, the stakeholder would be distributed the realized money in the liquidation process. That's the waterfall mechanism provided under section 53, because section 53 comes into that chapter of liquidation process. So section 53 is first with respect to the liquidation process. But to start with, we will be discussing the resolution plan process as well, because section 53 is also referred under section 30 subsection 2 when it comes for the distribution of the resolution plan value to the dissenting financial creditors and to the operational creditors. And because this is recently most, I would say, the hot topic is being discussed everywhere, uh, particularly the distribution of the resolution plan value to the dissenting financial creditors. So because section 53 is taken reference of under section 30 subsection 2. So we will be discussing that part as well. But because section 53, which is giving the waterfall mechanism, providing which a stakeholder is going to get, in what manner and how much amount, let us first look at who all are the stakeholders which is provided under section 53. As soon as we start reading section 53, if the participants over here can have the book with them, section 53 of the code. Which talks about distribution of the assets. Now, section 53 is a clause which starts with notwithstanding clause, which we call as non-obstanding clause. It reads as notwithstanding anything to the contrary contained in any law enacted by the parliament or any state legislature for the time being in force, the proceeds from the sale of liquidation assets shall be distributed in the following order of priority within such period and in such manner as may be specified. Two things are being provided here. That is the distribution first, in what priority and within such period and in such manner as may be specified. So in what manner, in what priority, that's given under section 53. And the regulation provides that within how much time you should distribute the money, as we know that schedule under liquidation regulation provides for distribution of the money in is a time-bound manner. So section 53 deals with these two aspects, priority of the payment and the manner and period in which that payment has to be made. The first very clause provides for the payment that the first which comes into the priority is insolvency resolution process cost. Now, if we really want to calculate the liquidation value under section 53, which is to be distributed in priority, that means to implement the waterfall mechanism, we must also know that what these terms or terminology mean. So very first point, insolvency resolution process cost. Is there anyone who can suggest that under what section this term has been defined? Insolvency resolution process cost. Anyone who can let everyone know that under what section this definition has been given. I think we are having quite good participants over here in good number. Am I otherwise audible, Miss Anjali? So insolvency resolution process cost, I believe that maybe section 5, I guess. Section 5. So insolvency resolution process cost is there under section 5 of section 13. But there are very interesting instances time to time, because as we know that IBC, as we always say, there is evolving law, we keep on interpreting these sections in our own manner, and then there are so many litigation which ultimately decide that particular question of law. So what falls into the definition of insolvency resolution process cost, though section 5 subsection 13 provides for it. But still, there are certain points which we must know, because those are certain cases or instances where you would see that the IPs who take some decision to include some particular part of the cost in insolvency resolution process cost, and they find themselves in some difficulty either before the IBBI or before NCLT or the appellate forum. So what generally that we mean by insolvency resolution process cost, that is the cost which is incurred in running the business as a going concern. Now, to run the business as a going concern, I believe that so many IPs must already be running some one or the other processes where the company is kept as a going concern. This terminology of going concern itself is something of which there are different interpretations. But one or two instances of which that I recently experienced, and they or one or two examples that I've given also in my PPT, if you would see. If some insolvency professional comes to or happen to deal with an insolvency resolution process where the company is already a going concern before the commencement of the CIRP, and that is kept as a going concern by the IP, then this is a general problem or general question that comes before the IP to take decision on, that there are already some vendors, there are already some operational creditors, some workmen already working, some employees are already there whose payment has already become outstanding. Now, as soon as IP comes into charge, those all vendors or the operational creditors, they come forward and they say that you first pay us the outstanding charges. That is before the commencement of the CIRP, which we call as prior cost of the cost which has already been incurred prior to commencement of CIRP. Otherwise, we will not render you any services. Now, their issue comes till the time COC is constituted, the IP has to run the company as a going concern. Now the IP is into fix that whether I should take that prior cost and make the payment to them. Otherwise, I'll not be able to get their services. And if I'm not getting their services, then company will not be able to be a going concern, would be violation of various sections provided under the code. If that particular situation comes, is there anyone who has experienced such instance, and what measure that was taken to meet out? Is there anyone who had such experience? So
No,
recently, yes.
in my in my early days,
Hmm.
we had this going concern. It is an operating entity. It is a manufacturing entity.
Hmm.
So, for the finished products and the supply and the raw material, we needed to, employ trucks. So
Yes.
they were paid on a credit basis of, 60, 90 days.
Right.
So when the CRP started, trucker said, no, if you don't pay, then I will not transport.
Right.
And so we had to take COC approval. Okay, bhai, these people are paid and they can't take, this kind of credit risk also. Okay, if you're not paid for 60, 90 days, they will also be out of cash.
Yes.
So we had to make way. But
Yes.
of late, this has become more stringent. Earlier, it
Hmm.
was more liberal in these cases.
Yes. Yes.
Now it has
Exactly.
become more stringent. So there is a problem, yes.
Yes. So here in this case now, I have now started hearing from the IPs it's better that not to keep the company as a going concern, because then they keep receiving the notices from the regulator as well. Certain things are there which are required to be dealt with practically, because it is also expected from all the IPs to keep the company as a going concern. Now, prior to commencement of the CRP, there is already some cost which has been incurred and it has to be paid to keep the company as a going concern. Whether should be made a part of the CRP cost or not is a big question. Now, there are recently, I would not say recently, one order is sometime back of the IBB in the case of Mr. Khandelwal, where he had to incur before the constitution of the COC 109 crores. He had to pay to the operational creditors who were supplying the coal. Now, he paid 109 CR, the cost which was incurred prior to commencement of the CIRP. But then there the regulator had taken the very lenient view and accepted the justification given by the IP that this amount should become part of the CRP cost. Otherwise, he would not be able to keep the company as a going concern. Now, there are one or two instances where this justification was not accepted by IBBI, where the IP incurred some money, incurred some cost, paid the cost and included that in CRP cost, with respect to particularly some wages or salaries of the workmen incurred prior to commencement of the CRP, but to continue their services, he had to pay that cost. But then regulator had taken the stringent view and imposed penalty as well. So I have seen IPs now to take some measures, which I would say to save them, either wait till the commencement, till the constitution of the COC, or in advance write to the IBBA that I am facing so and so situation. And if I am not going to pay the earlier dues, I would not be able to continue the going concern status of the company, or apply to the adjudicating authority and get some order from the adjudicating authority. I've seen the IPs to take these measures to save themselves. Now, as we are discussing that what becomes part of the CRP cost, there are one or two more, good judgments over it. This is one which we, are using everywhere nowadays, because the companies, especially which were manufacturing industries, already having so many workmen or employees, but was not a going concern at the time of commencement of the CIRP. Now, there are already 2,000, 3,000 workmen or employees on roll. The IP comes, takes over charge, company is not a going concern. He takes the efforts to restart the operations, but operations are not being restarted for whatever reason, not getting the interim finance or whatever. He's not able to continue the company as a going concern. So earlier, the case was the accrued wages and salaries used to be treated as part of the CRP cost, no matter company is not being operated as a going concern. But then we have this recent, not that recent, but it's been almost a year now, the judgment which came in the matter of Sunil Kumar Jain versus Sundaresh, but where the Supreme Court held that if the company's operations are not continued, you cannot say that it's a going concern. So going concern, if even codes is saying that IP has to take measure to take endeavors to restart the operations of the company, it doesn't mean that the company is a going concern unless the operations are restarted. So only the wages and salaries of those workmen and employees who are treated as essential and retained by the IP to keep the company do the necessary compliances, or maintain the functions of the company day-to-day basis. Only that salary or the wages of those workmen would become part of the CRP cost. Rest of the workmen or employees may not be treated as their salaries or wages may not be treated as part of the CRP cost. That came as a big relief to most of the COC CIRPs, where COC was burdened with a huge cost of the wages and salaries. So, but here this is we are, though if we represent IP, we are taking reference of this particular section, but the objections which is coming, which are coming to our reference of this particular judgment is this, that if the workmen or employees you supposed, or you made a decision as not essential for you, did you terminate them? And if you did not terminate them and you chose to keep them on your roll, then whether still you would say that their wages and salaries wouldn't become part of the CRP cost. Now, this question is also pending in some of the benches of NCLTs, where being RP, you are saying, or being COC, you are saying that the wages or salaries wouldn't become part of the CRP cost, but the employees or workmen who were kept on the roll, they are filing the objection to say that no, because we were not terminated, we were not informed that our services would no longer be needed. That's why we should be given the payment to that part of the CRP period. So let's see that how NCLT deals with it. Now, this is recent one more judgment which came. I'm just taking examples of what becomes part of the CRP cost and what not. The broader idea is this, that whatever cost that you incur for keeping the company as a going concern, that cost is the CRP cost. Now, if this is the recent judgment of one of the NCLTs that workmen filed their claim. Workmen filed their claim in which form? So is there any distinction between the workmen on the roll of the company and the workmen who come through a contractor?
No, if you're a principal employer, then you will need to give the dues as you would for an employee.
Yes, exactly. So as principal employer, the definition of principal employer is also very wider term. There in the people who are dealing into the work contracts matter would certainly know this. For example, like I am dealing into one case where Delhi Jal Board is having one project, and then Delhi Jal Board has awarded that project to one contractor. That contractor again has taken subcontractor, and the subcontractor has also taken services of sub agencies. Now, when the matter goes into the labor court, because some of the laborers employed by the sub agency is not getting their wages, the labor court says that the principal employer is Delhi Jal Board, and Delhi Jal Board would make the payment. In this case, so workman definition has been decided in one of the matters that by the NCLAT. There is no difference in the definition of the workman, be it on the role of the company or through the subcontractor. But the case was this, that when workmen filed their claim, they filed their claim in Form D. And the workmen who were through the contractor, the claim was filed by the contractor. The contractor filed the claim in Form B. Form B is form for the operational creditor, which was admitted by the resolution professional. So when it was filed by the operational credit as operational creditor in the resolution plan, the contractor was treated as the operational creditor, and the workmen who were employed through subcontractor were not considered at all because they individually did not file their claim. Now, in that case, NCLAT decided that the treatment given to the contractor was appropriate by the resolution professional because claim never came to be filed as the workman. Okay, so now we come, so as we were discussing the waterfall mechanism, under section 53, the priority is given to the insolvency resolution process cost. The insolvency resolution process cost is defined under section 5 of section 13. And then liquidation cost. Now, liquidation cost is under the liquidation regulations defined, and the definition is given under section, under regulation 2EA. Now, liquidation cost there is this recent judgment in the matter of Jai Narayan Gupta and Rashtriya Properties Private Limited. liquidation cost is interesting. If we come to this definition of liquidation cost in the liquidation process regulations, because I see that people actually struggle to compute the fees and the cost, liquidation cost. So liquidation cost also includes first point, which is fees payable to the liquidator under regulation 4 and remuneration payable by the liquidator under sub-regulation 7, cost which is incurred by the liquidator under sub-regulation 2 of regulation 24, and cost incurred by the liquidator for the securing the asset of the company, for keeping the company as a going concern, for the interim finance, and etc. This is the cost, liquidation cost as defined under section 2EA. Recently, in this particular case, what has happened is that the liquidator in the liquidation process invited for the compromise and arrangement. Now, if you read section 2EA and section 2 capital B, particularly section 2 capital B, which says that if the compromise and arrangement is invited, then the cost for the purposes of compromise and arrangement, if it is done within 90 days, would be, if it is successful, would be met by the corporate debtor. Not successful, it would be met by the proposer. Now, in this case, the liquidator had called for the compromise and arrangement, but the compromise arrangement didn't happen within 90 days. The process went on for some time, which exceeded 90 days. And ultimately it failed. Now the liquidator sought for the fees, which was around 23 lakh, and also for the expenses, which were around 24 lakhs. The proposer denied to make payment with for the fees part, and also disputed the cost part. The matter had traveled to NCLT and then to the NCLAT. It was what was decided over here is this, that when you read regulation 2B, capital B, which talks about cost, it doesn't talk about fees. And the cost is payable by the corporate debtor when it's successful and by the proposer if it's not successful. So therefore, because it was not successful, you cannot ask for the fees from the proposer, because 2B doesn't talk about the fees. It only talks about cost. So you can take the expenses which were computed and are payable, but the fees is regulated by regulation 4. So therefore, regulation 4 would apply. Regulation 2B doesn't apply for the computation of the fees part. So when section 53, as I said, when we discuss before going to the liquidation process altogether, section 53, after reading the insolvency and liquidation process cost, because in the next priority list come the workmen and the secured financial creditor in the pari passu manner. The workmen dues 24 months and secured debt are given pari passu. But to come to this second level of priority, I would first discuss the implication or the interpretation of section 53, that is waterfall mechanism, during the CRP process. Section 53 is referred during CIRP process at the time of deciding that how much money or the resolution plan value is attributable to the dissenting financial creditor and operational creditor. So when we see section 30 subsection 2, which deals with the mandatory clauses which a resolution plan must meet. So every resolution plan must provide for the minimum of liquidation value to the dissenting financial creditor and to the operational creditor. Otherwise, they are treated as non-compliant to section 30 subsection 2. Now, much of the noise has been made by the dissenting financial creditor, and the fight is still going on in Supreme Court on two main issues. But till now, what has remained the position is this. There are series of judgments which have discussed this particular issue. That when resolution, so section 30 subsection 2 provides that if this financial creditor either abstains from voting or does not vote in favor of the resolution plan are treated as dissenting. If they are dissenting financial creditor, they must at least get as per a minimum of the liquidation value. How the liquidation value is to be computed has been the question. For computation of liquidation value to the dissenting financial creditor, one thing that I would want to know from the IPs over here, that how do they calculate the main core issue? I would come to the point, but before that, for computation of the liquidation value to the financial creditors, first has to be insolvency process cost and liquidation cost has to be met. So when there is CIRP going on, plan value is given, liquidation value for the dissenting financial creditor is to be computed. I have seen some of the IPs doing this, that they fetch the liquidation value because you get the valuation done for the company, you get the liquidation value. From that liquidation value, you already know what is the CIRP cost, you deduct the CIRP cost. And some of the IPs I've seen also deduct the notional liquidation cost as well to reach to the exact liquidation value attributable to the financial creditor. Some of the COCs do not accept this formula of deducting the notional liquidation cost from the liquidation value of the company. I would want to know that what process is being used by the IPs who are participants over here. What is the right manner of doing it? Should we deduct the notional liquidation cost from the liquidation value to reach to the liquidation value for the dissenting financial creditors?
No, the valuers that we have appointed have always taken the liquidation cost. I mean, I have taken the valuation. I have not interfered in the valuation exercise as an RP. And valuers that we have seen have not taken into account or deducted the notional cost.
Notional cost of liquidation value.
And as RP is always a problem, in terms of, we can check with them for clarifications, but, interfering too much in the valuation exercise also is also not recommended.
Yes. So liquidation value, to take a literal meaning, whatever liquidation value that you have received from the valuer is the liquidation value of the company. Now we deduct the notional cost of the liquidation cost to arrive at the exact value, liquidation value at qua the dissenting financial creditor is the different formula being accepted by different COCs that I have seen. I have seen COCs who had proposed to deduct the liquidation cost, notional liquidation cost. And there are COCs who have gone by the exact liquidation value of the company as is being received. Now, so there are financial creditors who are having a charge over the security of the corporate debtor. So they have the security interest in their favor. Every COC or the secured financial creditor at the time of the
Let's find out. When I say go, you have to hold your breath, and we will see how much healthy your lungs really
is good to uh, remain healthy and keep checking that how your health is doing.
Sorry about that.
That's okay. That's all fine. Yes. So we were discussing that as being dissenting financial creditor. So COCs or the secured financial creditor, every time the resolution plan is placed before the COC, want to know that how much they are going to get if they dissent. So the RPs generally compute for the COC's convenience that if they dissent, how much they are going to get as per the liquidation value of the company and whatever is the resolution plan is providing for otherwise. These COCs also request to the RPs to place on the board that how much they would get as per the security interest and how much they are getting as per their voting share in the COC. So this exercise is always done by the RPs. This is the routine work that I've seen. Section 30 subsection 4 of the code provides, as everyone knows, that COC has the power to decide the distribution mechanism also. So when the resolution plan is put for the consideration of the COC, the RP also takes views of the COC that how COC wants to distribute the resolution plan value. So either COC decide to go by the resolution plan itself, because resolution plan many a times provides for the distribution mechanism that how the resolution applicant wants to distribute is the proposed money, or otherwise COC decide on their own formula for the distribution as a distribution mechanism, that which class of creditor is going to get what amount and in what manner. Needless to add here that COC, while deciding the distribution mechanism, has to meet the mandatory requirement of the code. But the formula for the distribution mechanism is the commercial wisdom of the COC. If the COC decides that the resolution plan value would be distributed in proportion to the security interest, would that be treated as compliant to section 30 subsection 2 or not? If COC, as part of their commercial wisdom under section 30 subsection 4, decides that the resolution plan value be distributed in proportion to the security interest of the financial creditors, would that be compliant to the mandatory requirement of the code?
Yeah, ultimately it's their decision.
Is their decision. So the COC may decide that the resolution plan value can go as per the security or in proportion to the security interest of the financial creditors. And if the COC decide that no, resolution plan value to be distributed in terms of the voting share, it is also for okay. And if the COC say that let the resolution plan go as it is, the resolution plan has already provided for a mechanism, we are not going to interfere with it. Resolution plan, whatever manner is or mechanism is provided over there is being approved by the COC, and then accordingly the decision of the majority of the COC is binding on all the stakeholders, including the dissenting financial creditors. So now there has been so many instances where the creditors first especially secured financial creditor, they decide after seeing their position as dissenting financial creditors, where do they stand? They may decide that, okay, let us not assent to the resolution plan. They either decide not to vote or they dissent from the voting. They dissent to approve the plan. So in that scenario, the issue which arises over here is this: that the secured financial creditor who have dissented, they dissented because they saw that if they dissent, their security interest is going to fetch good value, because in case of liquidation, if they decide not to relinquish their security interest under Section 52, they decide to realize their security interest. So their value to the security interest is coming much more as per them. That particular value to the security interest should be the liquidation value, and they must get at least that much value if they dissent to the resolution plan. So this controversy has traveled up to Supreme Court, but as of now, what view has been taken by the NCLT, because that is the prevailing view as on today, and there has been so many cases now deciding over this particular issue, and NCLT has framed its opinion, is not changing its opinion, is this: that during CIRP or in the resolution plan, in the case of the resolution plan being approved by the majority of the COC, in that scenario, the dissenting financial creditors would get the liquidation value of their debt, but not the liquidation value of their security interest. This is the view that NCLT has formed in number of cases. The one case that is there on the screen is Sidbi versus Vivek Raheja. And the question which was framed over there was this: that whether distribution approved by the COC as per voting share is in contravention of Section 30, subsection 2B. Because this Sidbi was dissenting financial creditor. Being dissenting financial creditor, he was the Sidbi was given the liquidation value of their share of a debt, but not share of the security interest. So the NCLT decided this, that if you read Section 53, 1 sub the clause 2, it doesn't use the expression security interest owed to the secured creditor, but it uses the expression debt owed to the secured creditor. So when you compute the liquidation value, you compute liquidation value of the debt, you do not compute liquidation value of the security interest. Therefore, the dissenting financial creditor cannot always come forward and say that they must get the liquidation value of their security interest. It may also raise some questions which we will discuss in some time. The other judgment is this, again on the screen. Here the unsecured financial creditor had challenged the resolution plan, saying that there is discrimination between the unsecured financial creditor being assenting or dissenting to the resolution plan. So the unsecured financial creditor had not voted. There were two unsecured financial creditor. One unsecured financial creditor voted for the resolution plan. The another one abstained from voting for the resolution plan. So the COC decided to give 1.48 crore to the unsecured financial creditor. Nothing was provided for the dissenting unsecured financial creditor. So here the NCLT had read that how Form H itself categorizes the unsecured financial creditor being assenting and dissenting as two categories. So if the law or code itself is differentiating between these two parties, you cannot say that there was any discrimination. Now, because the only requirement to be seen by the RP at the time of seeing the compliance with the code or the COC is this, that the dissenting financial creditor must get the liquidation value. Now, the unsecured financial creditors liquidation value, or say the unsecured financial creditors debt liquidation value, was coming to nil. And if it was coming to nil, there cannot be any non-compliance to the provision of law. If he was given nil, it was correct in the eyes of law, and there can be discrimination between assenting and dissenting because the law itself provides for. This is the most referred judgment by the NCLAT. Okay, so can anyone can anyone give or express their opinion that why is it so, or whether it is at all correct view by the NCLAT that the security interest of the secured creditors, the liquidation value of the security interest of the secured creditor should not be considered to be given as this to the dissenting financial creditor. Is this opinion framed by, is the judgment of the NCLAT correct, or there is some flaw, or there is some loophole which is coming more apparently on the face of it? What is Regulation 37? Is anyone aware of? Regulation 37 of CIRP regulations. Regulation 37 of CIRP regulations. So Regulation 37 of the CIRP regulation deals with the measures which can be taken by the resolution applicant in giving the resolution plan. If you read that regulation, Regulation 37 of the CIRP regulations, if you read that regulation, it says, or it gives right to the resolution applicant to deal with the assets of the corporate debtor. Regulation 37 provides that what kind of restructuring a resolution plan may provide. The resolution applicant may also provide of the corporate restructuring, can provide for the slum sale, can provide for the sale of the part of the asset of the company. If a resolution plan can include the treatment to any of the asset of the corporate debtor, it means that whosoever financial creditor or whosoever secured financial creditor, as and when they filed the claim, they already relinquished their security interest for the resolution process. So if this assumption is taken in the law itself, because Regulation 37 is giving free hand to the resolution applicant to deal with the properties of the company, unlike the liquidation process, because in liquidation process, there is Section 52. But in CIRP, there is no such thing. So in CIRP, as soon as any creditor files a claim, it means that they have already relinquished their security interest. And therefore, all the rights are given to proposed prospective resolution applicant to provide the measures to deal with the asset of the company in their resolution plan. And because it is so, because the law itself provides so, The dissenting financial creditors, after dissenting to the resolution plan, cannot say that we want to go out from the resolution process and realize a security interest by itself, or we want to get the exact value of the security interest. If that treatment starts to be given, then the whole process would fall. The process as it has been designed for the successful revival of any corporate debtor would not make any sense if this interpretation is started to be given. So therefore, the NCLAT has always kept its view very firm. The dissenting financial creditors should not be given the liquidation value to the security interest, because section 53 read with regulation 37 makes it very clear that the 53 first is only referred to calculate the liquidation value during CRP process, and the liquidation value is of the debt, not of the security interest.
Good point, ma'am.
So this regulation 37 is a very interesting point if you would read it. Now this one more judgment, that whether resolution plan providing for extinguishment of the security interest and guarantees of the dissenting financial creditor is contrary to the provision of section 30 subsection 2. So as one of the participants recently when I asked this question said that this is commercial wisdom of the COC, and we already know that once a resolution plan is being approved with the 66% of the voting, then it is binding on all the parties, be it dissenting financial creditor or any other stakeholder. Therefore, as I said, that regulation 37 has already given all the rights to the resolution applicant to deal with the properties of the corporate debtor. So as soon as the resolution plan resolution plan is approved, the dissenting financial creditors lose their right on the security interest because they have already relinquished. So resolution plan which provides for the extinguishment of the guarantees of the security interest of the dissenting financial creditor, that's not contrary to the provisions of law, is very well in terms of the law. And there is now a recent judgment also, if the COC also decides that the personal guarantees will also extinguish after the approval of this, or by virtue of the approval of the resolution plan, that's also not contrary to the provisions of law and very well in terms of the provision of law. But now, this very question has been referred to the larger bench by the Supreme Court in month of January 24. Because, this whole fight came cause of the different views of the Supreme Court in two judgments. So one was J.P. Kenningston judgment, in which I think the bench constitution was 3-judge bench, and the second judgment which came was India Resurgence by the divisional bench. These two judgments are having the contrary view. In case of JP, the view taken was this, that the dissenting financial creditor should be or may be allowed to take their security interest out and realize either their security interest on their own, or you give the exact monetary value of the security interest to them. But the India Resurgence ARC matter, which was the matter which came after JP, the India Resurgence did not follow the observations given by JP, and India Resurgence held that security interest value should not be considered while computing the liquidation value of the secured creditor. So now, in the DBS Bank versus Ruchi Soya, the bench of Justice Sanjeev Khanna has referred this matter to the larger bench, because this bench, Justice Sanjeev Khanna's bench, agrees with the judgment given in JP rather than in India Resurgence. So giving this observation, they have now referred the matter to the larger bench as pending. A similar issue is also pending in the matter of TBH versus Anil Goyal, where the NCLAT was of the view that once the resolution plan is approved or the liquidation process also is carried on under section 53, there is no difference of the charge holdings. So the inter se charge arrangements should not be considered, and all the secured creditors should be treated at par. Now that particular question of law is also pending with the Supreme Court. NCLT is of the view that all to be treated at par and should not be their inter se charge holdings or subservient charge holdings should not be considered at the time of the distribution. I don't know if it is visible or not, but if we want to calculate the liquidation value, how it should be, if now these cases that we discussed, if we calculate the liquidation value for the dissenting financial creditor, how that value would be calculated. So if when in the CRP process, as we discussed, the CRP process, dissenting financial creditor get as per the liquidation value to their debt as calculated by the valuer. But when the liquidation process starts, the secured creditor is having an option to not to relinquish the security interest, and that option is given to them under section 52. Now, if any secured creditor decides not to relinquish the security interest under section 52, that means they would realize outside the liquidation process, whatever value would come to them, they'll keep that value with them. If they realize something which is in excess to the value of their security interest, that excess amount is accounted to the liquidator. But if they get on realization of their security interest, if they are getting less than the value to the security interest, then for that particular amount, they come under section 53 under the waterfall mechanism. They come as unsecured creditor for the value, for the remaining value which they could not realize under section 52. But in case the security is relinquished under section 53, there are two methods to compute. Particularly if we want to take example of the valuation of security interest as well. If the secured creditors decide to relinquish their security and interest under section 53, that means to compute their liquidation value, the entire debt would be considered as their liquidation value. For example, if a secured financial creditor has filed a claim of rupees 500 crores and is admitted as 500 crore rupees claim, that value of debt is 500 crores. The suppose realization from the and there are three creditors. Each creditor is filing its claim. One secured creditor is filing its claim as 500 crores. One secured financial creditor. Another one is unsecured financial creditor. And third one is the operational creditor. So there are three categories of the creditors. We are discussing that how to compute the liquidation value if the security interest is relinquished. The charge which was created over the property is valued at rupees, suppose 10 crores. So the security interest value is 10 crore, but the debt amount is rupees 500 crores. So when you relinquish the security interest as per section 53, priority payment, first the realization, out of the realization you give the solvency process cost, then you give the liquidation cost along with it. After that, 24 months salary of wages of the workman, pari passu with the secured creditor. Now, secured creditor's debt was here rupees 500 crore, vis-a-vis its security interest of rupees 10 crore. But you are taking the debt only for computation of the liquidation value. So the amount which is recoverable or receivable by the secured creditor is rupees 500 crore because the claim filed is rupees 500 crore. If the realization comes of rupees 600 crore, out of that 600 crore, you would first give to the insolvency resolution process cost. Then you would come to the second part in which you are giving proportionately to the workman and to the secured financial creditor. Now, because here the debt is kept for the computation of the liquidation value, the whole amount would get exhausted over here itself. No matter the security interest was only of rupees 10 crore. So, in my view here, some unjust enrichment is being given to the secured financial creditor because securities against the 500 crore debt is only 10 crore. But still, because for computation of liquidation value, you are not considering the security interest, you are only considering the value of the debt. Here, the financial creditor is getting more than, or I would say logically, it's not, it doesn't seem reasonable to me. But suppose in that scenario, if we take the security interest value to compute the liquidation value, it would sound very logical, but it's obviously has not been accepted by NCLT. So the secured financial creditor debt is of rupees 500 crore. The security value is of rupees 10 crore. What would happen if we take the security interest for the computation of the liquidation value? This will happen. You realize 600 crore. Out of 600 crore, you are first making payment of the process cost. Then you are coming to the second part of the priority payment, giving pari passu first to the 24 months wages to the workmen. Then, if we are taking the liquidation value of the security interest, is only rupees 10 crore which would come to the secured creditor. For rest of the amount, he would be treated as unsecured financial creditor. That means he would come under section 53(1)(d). And that would also mean that you are having a good amount of money to be given to the other creditors falling under the line of the waterfall mechanism. But though this case number 3 has not been accepted by the NCLT because NCLT is of the view that section 53 uses the word debt. It doesn't use the word security interest. Now, this particular whole situation is pending before the Honorable Supreme Court. So let us see that how Supreme Court would deal into this. Okay, so here we discussed up to so in waterfall mechanism, we discussed layer number 1, that is once you realize from the liquidation estate, you first give it to the process cost, then in pari passu to the workman and to the secured financial creditor, and then you would come to the third part. That is the, I'm sorry. So after the workman, the dues of the employees for 12 months come under the waterfall mechanism. So when we discuss here this workman and employees dues, we all know that we would have to discuss that what forms part of the liquidation estate or not. So in the liquidation process, we first realize, the liquidator has to create the liquidation estate to realize in the liquidation process, which will then be distributed under the waterfall mechanism. Now, what becomes part of the liquidation estate and what is not is also defined. I'm sorry. So, liquidation estate definition is already given under section 36. In the liquidation estate, the gratuity, pension fund, provident fund are not included. So when it means that the fund which has been created to meet the pension or the gratuity or the provident fund dues should not become part of the liquidation estate and should not be used to make payment of the stakeholders under the waterfall mechanism. The recent judgment, as we all know, is the Jet Airways judgment. The Jet Airways judgment deals into the CRP process because Jet Airways was has been revived under the resolution process. In that particular judgment, what has been decided is this, that the EPFO dues are to be paid, are required to be paid in full, are required to be paid 100%. It also talks about gratuity. So the retirement dues of the workmen and employees, because are not part of the liquidation estate, it is a duty of the RP or to say then of the resolution applicant to make payment in full. So in the Jet Airways case, because the resolution plan was already approved and then was challenged in NCLAT, it was challenged on the ground that it doesn't provide for the EPFO and gratuity or other retirement dues of the wage of the workers or employees. And the NCLAT there had decided that it is the resolution applicant who would have to bring the new money. I mean, in addition to what he has already been proposing as the resolution plan, he would have to bring new money to meet these retirement dues of the workmen. So since then, many of the resolution plan has been returned back to the COC to decide and then to make provision for the 100% of the EPFO dues and of the gratuity as the case may be. But with respect to the gratuity, there is one catch over here, as we know that gratuity is payable only in case of the termination of the services. In Jet Airways case, the resolution applicant was not providing for the termination of the services of the workmen or employees. The resolution plan had provided for or in fact had demerged one of the entities. Some of the workmen or employees were being continued in the demerged entity. The NCLAT had held there is this, that if the workmen or the employees are not being terminated and are continued in their services, the gratuity will not be payable to them. Now, in the CRP processes after the Jet Airways judgment, the CRP process, the resolution plan which were pending for the approval with the NCLT, many of the applications started being filed in this way that the resolution plan already was, in most of the cases, 99% cases was not providing for the 100% EPFO dues. But okay, after this particular judgment, many of the RAs had come forward. Either the plans were withdrawn or the plans uh, uh, were made compliant with this requirement, were given 100% EPFO dues. For gratuity, if the resolution plan was providing for the continuation of the services of the workmen, the gratuity was not being provided because the new employer, if would decide after taking over the charge to discontinue with the services, then the gratuity would accrue as per Section 4 of the Gratuity Act. But the resolution applicants on such kind of submission of the COC and RPs, that the gratuity is the liability of the RA, because RA is going with taking the company along with the employees and workmen. That is what the going concern means, that you take the employees and workmen with you. So it is the liability or responsibility of the resolution applicant to meet with, to which the resolution applicants are now filing the applications to say this, that we filed the application basis the books of accounts provided to us. Now the books of accounts, if we see, are already accounting for the gratuity liability, because in the books you make the provision for the gratuity liability as well. No matter is getting not payable. It has already been accrued for all the employees who have already completed services of 5 years. So it's being accrued and you are accounting it for as liability in your books. It is not payable as of now, it would be payable later, but you have already accounted for it. So once we give the resolution plan, it is settling with all the liabilities. So I am also settling the liability up to the date of the approval of the plan with respect to the gratuity as well. So all the employees and workmen should be, their gratuity liability should be met by the COC out of the resolution plan value that we have already provided to them. So the resolution applicants are not interested to shed some new money for making the payment for the gratuity. So this is also being is pending before the different authorities. In fact, it is also pending in the Supreme Court. After the Jet Airways judgment, those workmen and employees who did not get the gratuity had gone to the Supreme Court. So as we know, the Jet Airways judgment, when it was challenged on the part of the directions to the RA to meet 100% liability of the EPFO, was dismissed, and NCLAT judgments holds good. But another appeal is still pending, which went out of this particular judgment by the workmen who claim for their gratuity payment till their services up to the time of the approval of the resolution plan. So this is the case of Jet Airways, which has clarified long pending questions on the rights of the employees and workmen, and the inclusion of the employees or workmen dues with respect to their retirement dues in the liquidation estate of the corporate debtor. Okay, so there is one more point which comes over here when we discuss this part. Employees, so we first paid insolvency resolution process cost, then liquidation cost. After that, the workmen dues of 24 months along with the secured creditors in pari passu. Then comes the employees dues of 12 months. We discussed that the retirement dues doesn't become part of the liquidation estate. So the funds, if are having any money, cannot be utilized for the payment or disbursement to the stakeholders. And after the employees dues, the next priority is given to the unsecured financial creditors. And next goes to the crown debts, that is the government dues and unpaid dues of the secured creditor. Now, these two, this particular stage of priority is also connected with the right of the secured creditor, as we just now discussed, not to relinquish their security interest. So if the secured creditor decide to realize their security interest under section 52, they decide not to relinquish their right under section 52, they may realize their security interest as per the applicable law under section 52. Now, if any secured creditor decides to realize the security interest under any other applicable law, they are also required to meet the insolvency, outstanding unpaid insolvency resolution process cost and liquidation cost, as well as the workman dues of their proportion. This is provided under section 52, subsection 8, that if the secured creditor decides to not to relinquish their security interest, they are required to meet the cost aspect and their proportionate share to the workman dues out of the realization of their secured security interest. So whenever we read section 52, we also read regulation 21 along with it, because regulation 21 of the liquidation process regulation is providing the manner in which they should pay the cost. It is regulation 21 capital A. So as per 21 capital A, which is read with section 52, any secured financial creditor who wants to not to relinquish the security interest has to intimate to the liquidator at the time of giving their claim within 30 days. And if they fail to do so, it is presumed that they have relinquished their security interest. Now, once the security interest has been communicated by the secured creditor not relinquished, then the liquidator generally computes the cost which the secured creditor is required to bear in their proportion. And that cost is required to be met within 90 days from the liquidation commencement date. And if the secured creditor fails to meet the requirement, if the secured creditor fails to pay the cost, then the security interest is again added to the liquidation estate, and then liquidator would get a right to realize the security interest. Now, the controversy over here generally comes as this, that in the last COC meeting, I mean, before the company is put to the liquidation, generally the RPs also put this agenda as per the required regulation of CRP regulations, the estimated liquidation cost. And the outstanding or unpaid CRP cost is also put on record. So it is presumed that every COC member was having the knowledge of the outstanding cost that is required to be paid. It is presumed so. But what in case, because this particular regulation is not mandatory to be added, so in case the estimated liquidation cost was not computed in the last COC meeting, then it becomes obligatory on the part of the liquidator to intimate to the secured creditor who decides to not to relinquish their security interest the amount of the cost which they have to bear. We have seen the instances where the liquidator fails on their part to communicate the liquidation cost. We have seen that, and then there is delay on the part of the secured creditor to meet the cost. And if that happens, the liquidator gives the notice to the secured creditor that I am taking the security back, and then litigation starts. The secured creditor goes to the NCLT and says that I was never given information about the liquidation cost that is attributable to me so that I could make the payment. So it is important that if the secured creditor decides to not to relinquish, then it's on to liquidator to compute the proportionate cost and let the secured creditor know their proportion of the cost to be met, which they are required to meet within 90 days. And if the security interest is realized and the security interest realized is in excess of the security interest value, then the excess amount is required to be accounted to the liquidator within 180 days. The meaning of this is this. The 180 days period is now treated as the maximum time within which the secured creditor is to realize the value. So if this, because though if you read this particular regulation, it doesn't say in direct terms that the maximum time period given to the secured creditor to realize the security interest is this. It doesn't say in the direct terms. But if you read sub-regulation 2, clause B, which says that the excess of the realized value of the asset, which is subject to security interest over the amount of his claim admitted, has to be accounted to the liquidator within 180 days from the liquidation commencement date. It means that the liquidation, the secured creditor is required to realize the security interest within 180 days of the liquidation commencement date. Now, generally, the secured financial creditor in the liquidation process who decides not to relinquish are generally financial institutions, and they or the government authorities, and they take much more time than 180 days to realize a security interest. And in that scenario, the liquidator can ask or approach to the NCLT to get the security back, showing the incapability of the secured creditor for realization of the security interest. So we have seen those instances as well. And now the most used act or law, applicable law in this scenario is SARFAESI, because the financial institutions who decide not to relinquish, they realize a security interest under SARFAESI Act. In SARFAESI Act, if it is applicable, then regulation 37 of the liquidation process is not applicable. Because regulation 37, if we read, it says that realization of the security interest by the secured creditor, that if secured creditor is realizing its security interest under section 52, then it has to first know the liquidator that at what value, at what amount he can sell the property in the market. So as soon as a prospective buyer is there for the secured creditor, he would let the liquidator also know as per regulation 37. In that scenario, the liquidator would see if liquidator has a better buyer, then liquidator would let know the secured creditor that I can fetch more value than what you can, and accordingly liquidator takes over. But this particular regulation 37 is not applicable in the case where the secured secured creditor is realizing a security interest under the SARFAESI Act. Now, the Securitization and Reconstruction of Financial Enforcement Security Interest Act is providing different providing a manner of realizing the security interest. If it is done so, whatever so there I have seen one of the cases where the corporate debtor was having different businesses, or for example in the case of EPC companies, the corporate debtor has different projects. Those projects are given or are run through different JVs. So you are having different businesses which are separable from each other. So in case of SARFAC, if you're advising to the financial creditor as well, because I see IPs, they are into the advisory profession as well. The secured creditor are taking over the management of that particular JV altogether separately and running that JV till the time it is realized. It is realized under the SARFAC Act by way of auction or whatever. So yes, it is quite interesting if the security interest is realized outside the liquidation process. Altogether, different advisory functions that you get to do through the security, through the secured financial creditors. So this is section 52, and under section 52, whatever is realized, that would, if it is in excess, it will, as I said, would go to the liquidator, and if it is lesser than their security interest, then for remaining part, they are treated as unsecured financial creditor and are given in the priority after the payment of the employees' dues. Sorry, I'm so sorry. They would be treated as unpaid dues of the secured creditor, so they would fall under 52(2)(e). So after that, the rest, the next stage under the waterfall mechanism comes as other debt or include trade creditors, and at the end, which we call as the owners secure, these are preference shareholders and equity shareholders. So this is the whole waterfall mechanism, which is provided under section 53. So we can discuss if anyone has any query on the points that we have discussed till now. Does anyone has any query on any of the points that we had discussed?
Please proceed.
So can we just take 10 minutes break and then we resume in 10 minutes?
Yes, ma'am. After 10 minutes, we will resume.
Okay, thank you so much. Hey, can we start now?
Yes, ma'am. We can start.
Okay. So, because we were discussing section 52, which is one of the manner of realization of the asset, but by the secured creditor outside the liquidation process. But if the securities are to be realized in the liquidation process, there are manners of doing so. So securities are realized by way of auction, which is the most used manner. In certain circumstances through a private sale. But when you do auction, it may be by way of uh, slum sale or asset to be sold in lots or as a going concern. Anyone here who has sold the corporate debtor as a going concern in liquidation process? Anyone who has dealt with any such matter in which corporate debtor was sold as a going concern in the liquidation process? So whether the sale of corporate debtor as a going concern in liquidation process to be taken akin to the sale of corporate debtor in the resolution plan process. You must have observed the liquidators or the successful bidders filing the applications before the NCLT seeking various reliefs and concessions in the going concern manner, if the sale is going concern manner. So there are two important litigation which arise out of the going concern sale. One is this, that whether the going concern sale would extinguish all the liabilities of the corporate debtor and the successful bidder would get the corporate debtor on a clean slate basis. This is one point. And second is whether the successful resolution applicant should get the reliefs and concessions. To get the same reliefs which are available to the resolution applicants when the resolution plan is approved by the NCLT. So getting all the liabilities extinguished if the sale of the company is as a going concern, there are two views and there are two judgments of the NCLAT giving different views. We know many matters of the NCLT in which the reliefs and concessions are given to the successful bidders, and also that all the liabilities, the relief and concession itself includes one of the relief that all the liabilities would get extinguished because all the creditors are settled under section 53 of the code. So because whatever realization is there by sale of the company as a going concern, that realization is distributed to all the creditors under section 53. So their all debt are treated to be settled with and get extinguished. So they get the same treatment as it is given in the resolution plan process. But the judgment of NCLAT principal bench said that the successful bidder would get this relief and concession only in case the process document providing for the sale of the company as a going concern had this clause that along with the asset, liabilities are not being transferred and liabilities are getting settled. If the process document was not having any such clause that the liabilities are getting settled, in that scenario, the meaning of the going concern would be taken as this, that you are taking the company by making the payment of the sale consideration, that means you are taking the company as it is, or to say that on as is where is basis, which would mean that you are taking assets of the company along with its liabilities. So liabilities will not get extinguished if the process document basis which you had taken participation in the auction had provided for so. So, the recent judgment of this was VDV Projects versus Pratibha Industries Limited, in which the NCLT has held so. So the VDB had given the auction, had participated in the auction for the to purchase the company as a going concern, and after being declared a successful bidder, he was informed that the company is being given to him on as is various basis, which included the liabilities also. So he defaulted. He didn't make a payment for the remaining part of the bid amount, and had approached to then NCLT. NCLT had given him opportunities to make the payment of the remaining part of the auction bid amount uh, without giving any concession. So the appeal came to be filed, and in appeal, the NCLT had gone through the process document which did not provide any such clause in the process document. So no relief was given to them. And however, there is one judgment of Shiv Shakti that was by NCLT bench number 3, which had held that because the going concern sale is equivalent to the revival of the company under the resolution plan process, so the release and concession should be given, and because the liabilities are settled under section 53, it would be treated as extinguished as all the claims are treated to be extinguished. So there are divergent views on this. Anyone has done any private sale under the liquidation process? Anyone who has dealt with the private sale, under what circumstances a private sale can happen or is allowed? Which regulation provides for the realization of the asset?
Regulation 32.
Yes, Regulation 32 is providing for the mode of sale, and the private sale is allowed in certain circumstances. And those circumstances include if the asset is perishable in nature, is deteriorable, is the value is getting deteriorated, and the asset is sold at a price where you are able to get the value which is more than the reserve price which you had proposed in the previous auction, or with the permission of the adjudicating authority. When the auction is done, if the mode of sale is auction, then in that scenario, a schedule is given under the liquidation process. That provision or the process provided under that schedule is to be followed. Schedule number 1, which decides that how would you put the reserve price, how can you reduce the reserve price, how much reserve price can be reduced, in what manner, and within how much time the bid amount has to be deposited, and if there is any delay, then interest would be levied. And after the maximum period which is given under the schedule, if the payment is not being made, then the auction would be treated as cancelled. the amount of EMD would be able to be forfeited. But in case if the private sale is done, whether this process of schedule is applicable, particularly with respect to the time period of making payment, whether this schedule provisions are applicable to the private sale also. If you have a look at schedule once, this is schedule number 1. The first part of it is auction, and then it starts with where an auction is to be sold. Sorry, when an asset is to be sold through auction, a liquidator shall do so in the manner specified herein. And the second part of it is private sale. And in the schedule under the heading of private sale, there are 5 clauses. The first clause is where an asset is to be sold through private sale, a liquidator shall conduct the sale in the manner specified herein, which says that the liquidator will prepare a strategy to approach the interested buyer. Private sale may be conducted through directly liaising with the potential buyers or through their agents. The sale shall stand completed in accordance with the terms of sale. Thereafter, the asset shall be delivered to the purchaser on receipt of the full consideration for the asset in the manner specified in the terms of sale. So, if there is any private sale, the schedule 1's schedule of time of payment is not applicable to the private sale. The private sale is totally governed, completely governed by the terms of the private sale. Why this is being discussed is because of the reason that we have seen in some of the processes where private sale is conducted. There is one lacuna in the private sale agreement. That private sale agreement provided for the time period or the time schedule for making the complete payment, but didn't provide for the levy of the interest as it is given in the schedule 1 if the sale is through auction. So because the private sale terms or the terms of the sale, or say the agreement to sale, was not having any clause with respect to the interest, and there was a delay in making the payment by the purchaser, he got benefited with that lacuna because the SCC or the creditors could not take any step against the auction purchaser, and the auction purchaser could get much time to make payment. So, though the term of the sale was providing this clause that the creditors would have a right to cancel the sale agreement if the purchaser is not making the payment within the prescribed time. But because the purchaser had made substantial payment already, it was not in the interest of the creditors to cancel the whole agreement to sale and then proceed once again for looking for or making a strategy to find a new buyer. So they could not take this drastic step of canceling the agreement as well, and they lost on the part of the interest also. So because the schedule 1 is not applicable on the private sale, So it is very important at the time when you are drafting your terms of sale, you include all those important clauses and make sure that because any particular term is not there, you should not cause, or the SEC themselves are not causing to themselves any loss. This is the mode of realization of the asset under section under the liquidation process, which is governed by Regulation 32. But the realization of the asset in the liquidation process is not so easy path. We keep seeing that liquidator face a lot of uh, problems, particularly when the properties are attached by the different authorities, particularly by the Enforcement Directorate. There are so many proceedings already going on where the liquidator are not able to realize the properties because it's attached, because the properties are attached by ED. So if that is the scenario, I am sure that you must be aware of the recent judgment of the Bombay High Court 2 days back. I think now order would be out. I had checked yesterday, it wasn't, but it's been all over in the news that Bombay High Court has held now that once the resolution plan is approved, NCLT can give effect to Section 32A. And there is no requirement for the RAs or the liquidator to approach the different authorities for getting the properties released from the attachment. But let's see, because already all the judgments are challenged by ED in the Supreme Court, and the one judgment which is pending is Ashok Kumar Saraugi's judgment, and everyone is waiting for that order to come. Though it's not, I've seen that one of the matters that I only dealt in such cases and where could get the property released from ED. But that was also, so the much difficulty that we face is this: at the time of approval of the resolution plan, the NCLT in the order itself had given the effect to Section 32A and directed to the Enforcement Directorate to release the properties from attachment. But even after so, and even after constantly following up with the authority, they didn't reply back, and then we understood that we will have to go to the appropriate authority, because till date, you would see 90% of the orders from the NCLT which had come is this, that we are not the appropriate authority and we are not having jurisdiction to deal with the ED matters, and you approach the appropriate authority. When we go to the authority under the PMLA Act, or so and if we apply under Section 32A, the PMLA, the authority under PMLA Act, they hold there is this, that we are not the appropriate authority to exercise any power under the IBC. So Section 32A is the provision under the IBC, is not the provision of PMLA. So we are not going to exercise that jurisdiction. So this is the difficulty which has been faced by majority of the professionals, that in NCLT, the ED comes and say that NCLT is not the appropriate authority. And when you go to the PMLA authority, PMLA is of the view that no, we cannot exercise jurisdiction under 32, under 32A of the code. But because in our case, the matter was also going on before the special court for the predicate offenses. So CBI case along with the PMLA case was going on before the special court. We approached the special court also. First got the corporate debtor discharged from the ongoing CBI case on the basis that the CRP is going on. The resolution plan is already approved. The company cannot be prosecuted as per Section 32A. So the corporate debtor was discharged from the predicate offense. And once the corporate debtor was discharged from the predicate offense, A discharge application was also filed before the special court under section 32A for discharge from the PMLA offences under section 3 and under section 4. And once that is done, once you are discharged because or by virtue of section 32A or applicability of section 32 of IBC from the special court, there is one provision which provides for the release of asset under section 8, subsection 7 of the PMLA Act. So section 8, subsection 7 of the PMLA Act, which says that if the trial cannot be continued for whatever reason, then you may apply to the special court for the release of the property. So because in our case, by virtue of section 32A, the trial cannot continue, we sought for the release of the property and the special court was pleased to even hold that a resolution applicant who had already given that much of money under the resolution plan approved by the NCLT, he will not get the fruit of his money until and unless the properties are discharged from the attachment. So the order was passed of discharge as well as of release of the asset. But simultaneously, we are also dealing with certain cases where the PMLA authority or the appellate tribunal have rejected our applications seeking the release of the asset by holding that we are not the authority to exercise our power. But now much relief is going to come if this Bombay High Court judgment is going to start being quoted everywhere, where it is being held that the NCLT itself is the appropriate authority to give effect to section 32A. So if that is so done, then in that scenario, I believe that it will not cause much problem to the IPs for getting properties released, and if not even so released, the liquidator or the RPs would be able to put the properties either for sale or be able to convince the prospective investors to apply as PRAs in the resolution process. However, one matter which is pending before the Supreme Court, which is going to again make things easier for us, the Ashok Kumar Saraugi matter, because as I said that we are seeing certain matters which are pending either before the NCLT or NCLATs. No hearing is being done because ED comes and say that this issue is pending before the Supreme Court. So in the Ashok Kumar Saraugi issue, the matter is this, which I believe that it's important to discuss because many of you would be also may have the similar issue and accordingly take appropriate steps. Then in Ashok Kumar Saraugi, the CIRP got initiated and post commencement of the CIRP, the provisional order came to be passed by the PMLA for attachment. Now, after the provisional attachment, of course, in certain period of time, the confirmation also is required to be done by under the PMLA Act. So the RP moved to the NCLT. And NCLT obviously held that I am not having the jurisdiction to deal into the PMLA issue, and you approach the appropriate authority. So the RP had come to the NCLAT and NCLAT decided not to interfere in the matter. So ultimately the matter had gone to the Supreme Court. Now in the Supreme Court, the question which has been framed is this, that whether PMLA has at all the authority to provisionally attach the asset after the commencement of the CIRP. So, yes, of course, if it is before commencement of the CIRP, as it has been held by different in different matters, that if the attachment was before commencement of the CIRP, the appropriate authority is the PMLA authority to approach for. But if the attachment has happened after the commencement of the CIRP, then the first question whether the PMLA authority has the jurisdiction to attach the properties at all. And if it is so, then which is the appropriate authority to deal with the question. So this is pending adjudication of Supreme Court, and meanwhile, the RP was allowed to proceed with the finding the resolution applicant, but plan should not be approved without the permission of the Supreme Court. So yes, so this is also going to decide this important question, which is going to impact the realization of the asset in the liquidation process. In a lot of cases which are on hold because of the attachment. So this is on the part of the realization of the asset, which we discussed that section 52 and the realization under section 53 to be distributed in the waterfall mechanism, the mode and manner of regulation 32 and 32A, the difficulties that we are facing, the going concern issue of sale, and we discussed the schedule, which provides for the private sale. Schedule 1, which provides for the sale by auction as well as by the private sale, but private sale is mostly governed by the terms of the sale, which is framed by the liquidator. Okay, so one point that we can discuss is the issue of the onerous property. So yes, what do you understand by the onerous property? Any one of you? What do you understand by the onerous property?
Something that is burdensome to the process.
Yes, something which is burdensome to the process, but how do you decide it that is onerous to the process?
Suppose like it doesn't work out, like it's better to sell off the property rather than in bits and pieces rather than to keep it and sell it together.
Okay, right.
Madam,
Yes,
the cost of realization is more than the realization itself. So it is
yes,
not worth doing anything with that property at all. Maybe?
yes, you're saying that when cost of realization is more than the the value of the property,
Yeah.
you can, if the SCC approves, because in one of the cases we were in fact having no property and but there was only cost which was coming or being incurred, we directly applied for the dissolution of the company. There are at least 6 to 7 or now more than those instances where the NCLT has from the CRP directly decided to dissolve the company without going into the liquidation at all.
One
So-
of that cases, I had done it from the IRP to directly to the resolution.
Yes,
One,
one is Dalmia case. There are 2-3 more cases.
Dalmia was my case.
Acha, okay. Then you have given the precedence to us. So we used it. We used it in 1 or 2 hour of cases because Dalmia had already done this, and Dalmia it had already happened. So we also had applied for dissolution because company was not having any asset and it was only cost which was being incurred. So yes, we thank you for that precedence to bring in. Yes. So with respect to onerous property, as ma'am rightly said, there's something which is burdensome to the company. Now, but how do you decide it? Because this is one aspect which is very well contentious whenever it is raised by any of the liquidator, because it generally impacts the rights of third parties. So, if the corporate debtor was having any contract which it entered into before the commencement of the CIRP itself, then CIRP continued and liquidation process also started. The liquidator realizes that the terms of the contract are such which are onerous to the corporate debtor. That means you are only performing, you're not getting anything in return. And then you want to get it declared as onerous because you can't yourself do that. You would have to go to the NCLT to get this declaration that this particular property is onerous to the corporate debtor. It's not being beneficial, but is only giving losses to the corporate debtor. So the application is to go to the adjudicating authority. But why it is difficult? Because it's going to impact the third party rights. Now there are judgments to say that once the contract was done before the commencement of the CIRP, you cannot negate that if those were the valid contracts. So to negate the contracts or the valid contracts post commencement of the CIRP, this would be a point to establish on your side, on your part, being liquidator, that how is this onerous in nature. Now, in fact, so many other things are attached with this. If any agreement you want to show that is onerous or the corporate debtor did it with some intent, which on the face of it causes loss to itself, you would also have to show that if you had taken any other steps and find out whether any fraudulent intent was also involved. So to get this disclaimer, because if you see the disclaimer of onerous property regulation number 10, the four clauses are there. The clause number 1 is that where any part of the property of corporate debtor consists of land of any tenure burdened with onerous covenants, which we understand that if any property is there which is burdened with the covenants, the clauses of the agreement which are burdensome in nature, you can now get it declared as onerous. But that getting property declared as onerous would not be that problematic scenario. Shares or stocks in the company, that investment that you have made is fetching no value to you. Any other property which is not sellable or not readily realizable by any reason. The last is unprofitable contracts. So when this fourth scenario comes, there are already so many instances, but it becomes very difficult for the liquidator to establish that this particular contract is not profitable because you are going to impact the third party rights as well. Now, to what extent the NCLT can decide whether the contract is profitable or valid or not, that's something to, litigate in. The but to approach to NCLT, also there is time prescribed under the provision that you would have to apply to adjudicating authority within 6 months of the liquidation commencement, and such provision is not there in the CRP regulations. It's only under the liquidation regulations. In the liquidation process, this onerous agreement provision is provided. Because obviously you understand that in the CRP you are giving the company as it is, because the RA would come and would do its due diligence and would decide whether how to deal with any of the asset of the corporate debtor. So therefore, the CRP would not need such kind of regulation where the liquidation process has. So if this has to be decided by the liquidator, it has to be done within time-bound manner so that you can apply to NCLT within 6 months of the commencement of the CRP. But when it comes to the unprofitable contract, it's a bit, something in which you would have to establish in the court that why it is unprofitable and why this contract to be declared as onerous in nature. So yes, this is with respect to the onerous property, because again, it deals with the realization of the asset. Early dissolution we have already discussed because one of the members had asked this query. And with respect to the claims, I think now it's mostly now settled that you can now carry forward the claims as well. We discussed the presumption of the security interest. Okay, so yes, one difficulty that we are facing for our clients, because NCLTs have are dealing with certain matters very theoretically at some places. Though I mean, I really appreciate with such burden all the NCLT benches are working, especially in NCLT Delhi. The members are taking 2 or 3 benches. One issue that we face in the liquidation process, particularly, because you are easily selling your tangible asset, but there are book debts which are not easily saleable, or you don't find the purchaser and then you sell in private sale. In one of the cases, because the SEC approved that all tangible assets have already been sold and only the book debts which are remaining, and after several round of public advertisement, and there is no expression which is coming from any of the investors, the SEC approved that you go for the private sale, because ultimately one expression had come. For which, of course, we have to approach the NCLT for taking their permission for selling any property through private sale. So accordingly, the NCLT was approached. Now it's book debts, of which, because the company is in liquidation, that means you can assume the 1 year had already gone in CRP process. And if the company was not operational for 2 years before that, most of the book debts have already become barred by time. So the value which was proposed in the private sale was quite low than the book value of the book debts. And when it was placed before the NCLT for their approval, the NCLT sees that there is a miss in the process, and which should be scrutinized. And when it is not even scrutinized, but the liquidation process should also be supervised by a supervisor appointed by the IBBI. Now, the liquidation process, the liquidator carries the most of the authority or powers. It's only when the decision of the liquidator is not acceptable to any of the stakeholders, then adjudicating authority is approached. But here the Honorable NCLT had directed for the supervisor be appointed through the IBBI. Post which the IBBI had filed an application saying that this is not possible. The IBBI the IBC or the liquidation regulations nowhere provide for the appointment of the supervisor on the liquidator. So this is not the appropriate this proposition given by the NCLT will not be able to be implemented because there is no such provision under the law. So ultimately, the NCLT also accepted the view of the IBBA, and the order was accordingly to that extent was uh, removed or discarded. But it comes to the this is not the one instance. It's, if you would see uh, anywhere where it comes to the sale of the book debts or the non-realizable asset, we are going to the NCLT seeking approval of the private sale without going into the facts of the case. If it's being held that there is some a mistake which is being or some mala fide intention the liquidator may possess, that's in my opinion, is not in terms or cannot be decided on the face of it, because the book debts carries its value in terms of the obviously the kind of debts they are, a kind of the operation that the company was into. So yes, this is again a point of difficulty when it comes to realization. It's very difficult to realize the book debts in the market in the liquidation process. So this is on the realization of the asset. Um, I think with respect to the realization, we have discussed almost all the provisions. I can take the queries if anyone has any query, or we can discuss on any of the points that we had covered today. On the waterfall mechanism, realization of the assets, section 52, section 53, mode of sale, anything. Anyone has any query or any topic that we can discuss on with respect to the waterfall mechanism?
I just had one doubt,
Yes.
whether stamp duty is applicable in case of sale during liquidation of property or the company as a going concern.
Stamp duty is applicable if the company has if the sale of the company is as a going concern.
Going concern or the assets are being sold during the liquidation under IBC. I
Yes.
don't know. I believe there are some case laws which I'm yet to go through.
So stamp duty, in one case which I had dealt into, we had sought relief of and we had not paid that, but there is one recent judgment of the NCLAT. I'm not recalling that, it's chairperson's order, which deals into the stamp duty question only. And so I am not, I mean, it's not handy with me, but if you want, I can get back to you on this. This is Justice Ashok Bhushan's judgment on this point, whether stamp duty is applicable or not. But in one of our cases, we had sought, I mean, the RA, because when they had applied for the relief and concession, they had sought for the release of the stamp duty. And that sale was sale as a going concern. But I'll get back to you on this. Miss Ranjani, right? You're on mute.
Manoranjani. I'm from
Manoj.
Hyderabad.
Sure. I'll get back to you on this point.
Thank you. I'll share my number on the chat box.
Yes, please. Yes, please. Any other question or point to discuss? So I see that there is one order of Telangana High Court which says that no stamp duty would attract on sale of property if it's sold through the auction in the liquidation process of IBC.
High Court.
High Court of Telangana.
Oh, that's wonderful. Can you share it?
Yes. It's Anirudh Agro Farms Private Limited versus State of Telangana.
Anirudh Agro, State of Telangana. Okay.
There is one of NCLAT also. I'll find that out because I was in court when this matter had come. So I remember that there is one matter in the NCLAT also.
Thank you so much.
Is any other point to discuss? I think this point that what can be included in the liquidation estate, though this now has been very well settled, there are certain companies in which the suppose if I just take example, the XYZ company goes into liquidation, and there was only one financial creditor. The financial creditor had secured the loan given to the corporate debtor by the property of the associate company. Now, the associate company had put a land on security to secure the loan given by the financial creditor to corporate debtor. Now, on that land only, the plant and machinery has been built by the corporate debtor. So, the land belongs to the associate company. The plant and machinery on that land is of the corporate debtor. The liquidation process is going on. There is only one financial creditor has the charge over the land of the third party and over the plant and machinery current asset of the corporate debtor. That one financial creditor or the sole financial creditor decides not to relinquish the asset, not to relinquish the security interest, and decides to realize it outside process. How? So if it is deciding to realize the security interests outside the process, it's easier. If the secured creditor decides to relinquish the asset, and the liquidator now has to realize the asset, how the liquidator would do it? Because you are not going to get the buyer only and only for the purposes of the plant and machinery, because land doesn't belong to you. Whether you can add that land into the liquidation estate. Now, as per section 36, which mostly reads as section 18 also in the CRP process, that you have to take charge over all the asset of the company or of the corporate debtor. The asset which doesn't belong to the corporate debtor, you cannot take control of. So when it comes to forming or making a liquidation estate, you cannot include the property which doesn't belong to the corporate debtor. This particular land which doesn't belong to the corporate debtor cannot be included in the liquidation estate. But then you would have to frame any mechanism in which you can find a buyer for the sale of the plant and machinery. So you would see that there are certain judgments of the NCLAT also, where the NCLAT has allowed to run a simultaneous process by the secured creditor and by the liquidator also. For example, the secured creditor would put on the auction that particular land which is belonging to the associate company, and liquidator would also simultaneously put the plant and machinery on auction. The process would be run in a manner that it is disclosed to the prospective investors that the plant and machinery is into the liquidation process, but to maximize the value, it is going to be sold to one single party, and accordingly, the advertisement is issued. So this mechanism, of course, the liquidators or the IP professionals only have come out with. Such kind of mechanisms were also have been used in the resolution processes where part of the property belongs to the associate company, and then how do you carve out in the resolution plan itself to make it convenient for the investor and also for the secured creditors to maximize the value of the asset of the company. So liquidation estate, because you cannot include the third party assets, mostly of the directors, sorry, or of the promoters who give their properties and on which the some asset is built of the corporate debtor. You can't include it in the liquidation estate, but then a simultaneous process can be run to realize the maximum value of it. So what you can include and cannot include in the liquidation estate is quite relevant. That is section 36. Accordingly, because your whole realization process is going to depend on this part of function that you carry as the liquidator. Is there any query? Because otherwise we have covered the topic of waterfall mechanism. And if there any query that I can deal with, please let me know. Or Anjali, if there is no query to answer, then we can conclude the session for today.
Sure, ma'am, we can conclude. Participants, do you have any question? Ma'am, I think we should conclude now.
Okay, sure.
On behalf of Team ICC IAP and all the participants, thank you very much, ma'am, for taking out time and addressing on the topic waterfall mechanism under IBC. The session was very insightful and excellent. Ma'am, you are requested to share your PPT, please.
I'll do that. And I'm also sharing my email ID. If anyone has any query, I can take that query through email as well. I'm sharing my email as well as the contact details. Though
Okay,
that
ma'am.
is there on my PPT as well.
Okay, ma'am.
Okay, thank you so much. And have a nice evening, everyone.
Thank you,
Thank
ma'am.
Thank you for such a wonderful session.
Thank you so much. Thank you.
Thank you very much. Thank you.
Thank you. Look forward to interact again.
Of course.